What is the main function of monetary policy committee? Relationship between repo rate and inflation. So now we can recently watched in news that the monetary policy committee has increased the interest rate to 40 basis points. I mean the repo rate stood at 4.40%. So this is a surprise move by the RBI. Since the outbreak of coronavirus pandemic, first time they have increased the interest rate to 40 basis points, and around 2 years it had unchanged the repo rate. It kept the repo rate at 4%. So this is a surprise move by the monetary policy committee, I mean the Reserve Bank of India. So first, before seeing about the monetary policy committee, first we can see about what is repo rate and how it connected to inflation. So the RBI is the central bank of India, I mean Reserve Bank of India is the central bank of India, and they will lend money to the commercial banks. So commercial banks, we can see all the banks are commercial banks like IOB, State Bank of India, ICICI. So there are more banks in India. All of those are commercial banks. So they can borrow money from the RBI. RBI lends money to the commercial banks. So after some time, the commercial banks will return the bond. I mean return the money to the Reserve Bank with some interest rate. So interest rate is very much important. So the interest rate is determined by the repo rate. So the repo rate is decided by the RBI's monetary policy committee. So with the respective repo rate, the commercial bank will return money with the interest rate to the Reserve Bank of India. So this repo rate is very much important because this repo rate plays a major role in controlling the inflation. Keep the inflation under control. So first we can see what is inflation. So inflation is nothing but is the liquidity. If the cash flow is high in the hands of the people in the country, then the inflation rate will increase. So if the cash flow is high in the hands of the people, inflation rate will increase. So inflation rate will automatically lead to the hike in price of goods and commodities. So the price of goods and commodities will eventually increase, which will affect the purchasing power. So if purchasing power is decreased, then automatically economy will be crashed. So before around 6 or 7 years, this what happened in Venezuela. During that time, a cup of coffee price of in Venezuela is something around 10 lakhs. I'm not sure about that. Now the Sri Lanka economic crisis, inflation plays a major role in Sri Lanka economic crisis, and the Nepal is going, the inflation in Nepal is touching about 7.14%, and the consequences will be faced by Nepal in a short period of time. So inflation will be disastrous. So the inflation should be maintained at a certain level. So this repo rate will determine the inflation. So now we can see, so to curb the inflation, the cash flow should be decreased. How the cash flow can be decreased? So if the repo rate is increased, the commercial bank should pay more interest rate to the RBI. Eventually the commercial bank will increase the interest rate to the interest rate of the loans given to the people. If commercial bank always lend more loans to the people, then people should pay back with high interest rate if the repo rate is increased. If people pay back with high interest rate, then the liquidity, I mean the cash flow is decreased in the country, I mean in the society. This is the normal method. So this is the method how the Reserve Bank will curb the inflation, will reduce the inflation. So now the inflation stands at, I mean the report released in March, so the retail inflation stands at 6.95%, which is very much high. RBI always wants to keep the inflation between 2% to 6%. Now it is approaching towards 7%. That's why the reason behind the hike in, I mean the hike in the interest rate. Now the RBI increased the interest rate to 40 basis points. Now the repo rate stands at 4.40%. So this interest rate will be, the repo rate will be determined by the monetary policy committee. Before 2016, it is determined only by the RBI governor. RBI governor will decide. But after 2016, the repo rate should be is a major term. So RBI constituted a monetary policy committee. Around 6 members are there in monetary policy committee. 3 members from the RBI. I mean, the Reserve Bank Governor is the chairperson of the Monetary Policy Committee, and Deputy Reserve Bank Governor, and also official from the Reserve Bank. 3 in Reserve Bank and another 3 from the central government. So central government will appoint 3 person who are very much knowledgeable in the term of economics. So around 6 members are in a monetary policy committee, and they will determine the repo rate from 2016. So in 2016 they amended the Reserve Bank Act 1934, and the monetary policy committee is in the section 45 ZB, and the monetary policy committee will meet 4 times a year, and they will determine the repo rate. So repo rate after that, after 2016, repo rate is determined by the RBI's monetary policy committee. So now we can see in news that RBI monetary policy committee have increased the repo rate. So this is the main function of RBI's monetary policy committee, I mean the MPC, and this is the relationship between repo rate and the inflation. So that's what I want to share with you. Thank you.